How you doing? It's Brad Stinson, VA Home Loan Specialist and Certified Instructor with Military Mortgage Bootcamp. This week's edition of Realtor Recon, I'm going to be breaking down two of the most common myths that surround VA credit underwriting. So why don't you stand by to get some. All right, so what we're dealing with today is two of the top three of my favorite myths that I love to bust. Tune in next week when we get to bust my favorite myth, the seller has to pay for the veteran's fees. This week we are going to be unpacking and breaking down VA credit underwriting myths. We're going to do this Recon style, so let's roll. All right, so myth number one, VA loans take longer to close. This one's just 100% false. 99% of all lenders across the country have automatic underwriting authority. What that means is you plug your data into DU and you get it approved eligible. As long as your data is accurate, this loan will close all day, every day. All right, so directly from the VA Lender Conference of this past year, which I had the pleasure of attending, and I am going to attend again this year, the national average application to close for the VA home loan of last year, 26 days. It's a pretty acceptable number, wouldn't you agree? Now, me personally, I've closed a VA loan in seven days, calendar days, not business days, calendar days. So, VA loans take longer to close? False. Busted. Now, myth number two, VA loans are harder to close. I understand where this one's coming from. Now, think about this. Every lender across the country can originate a VA home loan, but not every lender can originate a VA home loan. Wrap your head around that one. All right, so to understand myth number two, let's dive into why a lender would want to give a VA home loan. All right, so first, let's back up and take a look at the bigger picture here. The role that the VA and Ginnie Mae play in this entire process. So Ginnie Mae is part of the secondary market along with Fannie Mae and Freddie Mac, okay? And they work as an insurance companies. Ginnie Mae deals with the VA. So the role that Ginnie Mae and the VA play in this entire process is they guarantee, this is where the VA Home Loan Guarantee Program comes from, they guarantee or insure a lender in the event of default or foreclosure, 25% of the original loan balance. That means they pay it back. So if we default or foreclose, meaning we're no longer making payments, Ginnie Mae, VA will pay the lender 25% of the original loan balance. Roger, you got that. Okay, so let's look at the default performances, all right? So, straight from the lender conference, foreclosure rate, VA, 0.92%. Conventional, 4.19%. FHA, over 10. All right, so what does this stat mean? That means that of all the VA home loans, 0.92% default or foreclose, under 1%. That's pretty phenomenal. So what do all these stats mean, and why should you care? So what? Okay, so what is this saying? This is saying that if me as a lender, I give a veteran a home loan, I have a 99.08% chance that I will receive an on-time payment each and every month for the duration of the loan. And if I do not, the VA says, hey, guess what? We're going to give you 25% of the original loan balance. It's a win-win. Again, my name is Brad Stinson, VA Home Loan Specialist. So I ask you, if you know of a veteran that's in need of my services, or you have a veteran client right now that you just have some questions on, please reach out to me. Because there is nothing more that I love to do than to help my brothers and sisters in arms get into homes. Because I know the intrinsic value it brought me, and it allowed me to transition home. Have a great week. Tune in for next week's Realtor Recon, where I'm going to be busting my all-time favorite myth. And that is the seller has to pay for the veteran's fee, and it is a game changer here in West Michigan. My name is Brad Stinson. Semper Fi. Have a great week. I'm out of here.